In an industry where a company that's a long-term investment is hard to find, there is one gold company that may pique your interest for gold investing, and that is Sandstorm Gold. Sandstorm Gold is a royalty and streaming company that provides capital to gold mining companies in exchange for a cut of the gold that they dig out of the mine. And Sandstorm buys that gold at a low fixed price, typically around $400 per ounce on average. There are a few gold royalty companies out there, but we think Sandstorm is worthy of your own due diligence. As a disclosure, we are proud shareholders of the company, and although we hardly advertise gold stocks, we believe in the Sandstorm management, led by former executive of Silver Wheaton, Nolan Watson. Sandstorm is geographically diversified with exposure in North and South America, Africa, and Asia, and has 21 producing assets that have netted them an increasing amount of positive operating cash flow and revenue in the past 4 quarters. They also have 22 mines in the development stage that will increase their cash flow substantially in the next few years. Be sure to check out Sandstorm Gold at sandstormgold.com/invest.
Hello, everyone. Welcome to Wall Street for Main Street podcast. Mo is here, and today we have a returning guest. His name is Robert Wenzel. He is the editor of the Economic Policy Journal. Robert, thank you for joining us, and Happy New Year.
Hey, my pleasure. Same to you, Mo.
2017 has been off to an interesting start so far, politically and also economically, with the Dow Jones hitting 20,000 for the first time. Do you ever think that the Dow Jones will ever go that high in this current boom cycle that we're in?
Well, actually, Mo, I've been pretty bullish on the stock market, and as a matter of fact, I have, in addition to economicpolicyjournal.com, I have a newsletter that goes out to investors called the EPJ Daily Alert, and I wrote to investors before the election that regardless of who won, the stock market would continue to increase because of the amount of money the Federal Reserve has been pumping into the system. And I went on to say that if Donald Trump won, there would probably be a short sell-off, and that the investors should buy that sell-off because I expected more. So what we've seen here doesn't surprise me. I'm not sure how much longer it's going to last. The Federal Reserve is pumping a lot of money, but at the same time, we have President Trump putting on all kinds of different changes and executive orders out there, and on top of it, there's the suggestion he's going to put some tariffs on, which might scare the market. So we've got a number of counter trends going on from here, but the march to 20,000 did not surprise me.
Yeah, we were supposed to see a sell-off once Trump won the election in November, but that never happened. Despite the night of the election, the market overnight was down, but once the market opened, it shot right up. So I guess people on Wall Street and the institutional buyers didn't mind having Trump in the White House.
Yeah, well, part of it, I mean, it really comes down to how much money is available to buy stocks, and the Federal Reserve was printing quite a bit, so I anticipated the market to go up, maybe not necessarily on the day after the election if Trump was elected, but you did see that fall off in foreign markets overnight, but that was the extent of it, and then it just started climbing from there, and that's more explained, I think, by Fed policy than necessarily Trump. If everybody could have been excited as hell about Trump, but if the money wasn't around to buy the stocks, the market wouldn't have gone up. The driving factor is the money that's in the system and available to buy stocks.
So the Dow Jones hit 20,000 last week. Today, January 30th, had a bad day in the market and went below 20,000. But once it hit 20,000, there wasn't a feel of optimism. If you go on the internet or you talk to entrepreneurs or investors, not very optimistic on what's going on in the market and the economy. it's probably no surprise for people like me and you and our listeners, but for Main Street, they continue to act like everything is great and the economy is doing very well.
Right. Well, basically, what you have here. I mean, bull markets always climb a wall of worry, and what that means is, as long as people are worried, there's still fuel available. Because if you think about it, what worry is all about is people who have money not putting money into the system or selling stocks when it goes a little bit higher. When you get in a full speculative blow-off, you've got the other. Everybody's optimistic, and everybody thinks it's going to go higher, and nobody has any additional money to put into the stock market because everybody's in it. So a wall of worry can be a very good situation for a market. But again, right now we've got cross trends. I mean, I think there's a lot of money out there, but on the other hand, there's going to be tremendous shifts in the economy because of Trump policies, from tariffs to large expansion of the military sector. It's going to require a lot of spending. So we really don't know how all this is going to play out. And I'm more cautious now than I was right after the election.
I'm with you. I don't think this boom can last forever. I mean, there's got to be a bust eventually. Who knows when it's going to happen, but it will happen. Just a matter of when. So, and also, I'm talking about Trump and his economic policies. I don't think there's anything he can do to fix the economy because the economy is so leveraged with so much debt, and Wall Street is leveraged with a lot of derivatives. It seems like no matter what he does in terms of cutting back regulations or taxes, I don't think it's going to be enough to save the economy from a upcoming bust in the economy. Do you agree?
Well, yeah, Mo. I mean, cutting regulations is good, but it's really to be seen what regulations he cuts and whatnot. As far as taxes are concerned, if he really actually did cut taxes across the board, that would be very, very positive for the economy and most likely for the stock market. But what I think he'll do is something deceptive. I mean, he'll cut corporate taxes, for example, but he's going to raise money somewhere else. So either he's going to have very, very high tariffs on, which is a tax on consumers here in the United States, or he'll put on some kind of other tax, because there's just no way he's with the spending plans he has, especially for the military. There's just no way that he is going to be able to cut and spend the way he wants without at least. I mean, he's got some advisors around him that are telling him that they believe in supply side economics, which says that if you cut taxes, the growth in the economy will make up for it, and you'll get revenue increases that way. But there's a lot of questions with regard to that theory, but not, especially given the size of the tax cuts he wants and the amount of spending that he wants to do. You're probably going to see government debt really climb, government deficits really climb, and like I say, my guess is that there'll be additional taxes, maybe hidden kind of taxes, but there'll be taxes somewhere in the economy. So it's kind of misleading. He's not just cutting taxes and letting the economy run. He's cutting taxes in one sector for corporations, and then making up for it with taxes, tariffs, whatever he'll call it in other sectors.
Let's look at Trump economic policy. He is advocating right now. He's advocating for a tariff or import tax on Mexico and China, saying that they charge the U.S. for import taxes, especially also in Germany and China and Mexico, but we don't charge any import taxes, so that causes an unfair advantage for manufacturing jobs here in the United States. But the manufacturing jobs here are gone for many other regions, and a lot of it has to do with the wages, the inflation that we have in this country, and the regulation, and also, of course, the taxes, because we have one of the highest corporate taxes in the world. I don't think the import tax is going to be enough to bring all the jobs back here, or if it does, everything's going to be a lot more expensive than it was today. What do you think about his Trump policy on trade and free trade and the import tax?
Well, Trump's policy is terrible. I mean, it's literally Neanderthal. If you go back and you study when Neanderthals roamed the planet and Homo sapiens roamed the planet, Neanderthals had bigger heads, which suggested they were smarter. But the one thing it appears that Neanderthals didn't do is trade even amongst themselves. Archaeologists have gone back and they've looked at Neanderthal camps, and it seems like every sort of camp developed its own weapons, its own cooking ware. There wasn't a lot of cross trade between different groups. There wasn't the exact same kind of cooking ware and weapons and all that kind of stuff. Whereas Homo sapiens traded. So if you saw a weapon in one part of the planet, it would end up in other parts of the planet amongst Homo sapiens. So there's theories that suggest the reason we beat out the Neanderthals is because we traded, so we had the best weapons because we traded across, and whoever had the best weapons, we all used them, and we all used the same kind of cooking ware, and the Neanderthals didn't do this. So there's strong theories out there that the reason we beat the Neanderthals out because of that. So if you go back to a situation where you think of trade as a war and others taking advantage of you, and you put up barriers, I mean, it's very Neanderthal thinking that wipe people off. I mean, it's much more than just looking at higher costs. That's something that will develop, but what will happen is there'll actually be a shrinkage in production of product across the world. And what really increases standard of living is lots of products. So prices go down, and there's product out there. And when you have these trade barriers and this Neanderthal thinking, you've got the other situation where trade shrinks and the standard of living for people across the world. Because Trump sort of has this bizarre view. It's called a zero-sum game. He thinks that if some product is sold by someone overseas, that means a loss here in the United States. But it may just very well be that our workers are so expensive because they're so smart and so skilled and have so much capital behind them that they're much more valuable in other areas. So it makes sense for some types of products where especially there's a lot of manual labor involved for that to be done overseas. So if Trump puts tariffs up high enough where these products aren't made overseas, there will be still some demand here in the United States for those products. And what will happen is companies will form, but they're going to have to bid away workers from current work they're doing. So what's going to happen is the workers that were working on other projects are going to have to work on projects here that, say, before were being done, menial work that was being done by Mexicans or Chinese or whatever the case might be. So as Mexicans, Chinese aren't making that stuff, we're making it here, but only because we're bidding workers away from other products they were working on. So there'll be a net shrinkage in product, and that's the problem. That's where the standard of living crashes. And so the more barriers you put up, the worse it gets. And of course, foreign countries sort of have a thinking similar to Trump, so they're going to battle, quote unquote, battle Trump by putting up their own tariffs, and it's just going to create a much less vibrant economy. It's going to cut supply chains significantly, and it's just going to lower production across the globe. It's a terrible thing.
Yeah, I don't think a lot of people understand the benefit of free trade across the political spectrum. The liberals or the conservatives, and even a lot of the libertarians don't understand the benefit of free trade. And I understand there's some downside to free trade where jobs get diminished or they go away, like manufacturing job here in the United States. But these jobs don't stay around forever. I mean, back in 1800, people were making, those horse carriers for the horses, but now they don't exist anymore for the most part because the cars have replaced the horse carriers. So that's one example. And also,
but Mo, I think the key to focus on is if you have free markets in labor, okay?
Yeah.
Market's clear. Whether it's the price of a hamburger, the price of a book, the price of a car, the price of labor, market's clear where exchange occurs and everybody can sort of get employed, okay? Now, what can happen is if you put these barriers up, there's switches in where the labor occurs, but it's not necessarily in addition to labor. There's no tariffs have nothing to do, although Trump doesn't understand this, there is no addition to labor by putting up tariffs. It's a shift in where the labor is, and it's a shift that will shrink production, not increase production. So he's sort of looking at the middle stuff. He's very, very naive as far as economic understanding. He just doesn't think in depth, and he's.
Are you surprised? Considering he is a businessman, so not every businessman going to understand economics, but for someone of his caliber, he should understand the concept of free trade since he has.
Well, Mo, let me ask you this: Michael Jordan was a great basketball player. Had great eye-hand coordination. Could jump over the basket. Would you want him to operate on your knees just because he could jump high with his knees? There's no connection between being a good businessman and necessarily understanding how an economy works any more than there is between a great basketball player being able to jump high and being the guy that should operate on your knees. It's two different things. The study of how something works and it actually working have nothing to do. A businessman, and Trump is a perfect example of this, can go and operate for a very, very long time, be very, very successful, and still not have a clue as to the fundamentals of economics, which is, in one sense, it's a good thing because he doesn't need to be bogged down with all that theory and understanding. But on the other hand, if he decides that, he should be king because he's a businessman and therefore he understands economics, that's crazy. That's like Michael Jordan think he should be a knee doctor because he could jump high and scored a lot of points with hand-eye coordinator. I mean, maybe Michael Jordan should think he's operate on knees in the morning and operate on eyes and hands in the afternoon. It makes no sense.
That's a great point. I don't know if you know this, but Trump clothing line, they're not even made in the U.S. They're made overseas. So this guy doesn't even walk the talk.
Yeah, I mean, I consider him the greatest street hustler that ever lived. He's a street hustler. He was able to pull his stuff off, working in Manhattan, working with builders, because you really didn't have a situation where, a lot of people were probing and checking all the comments he made, and he keeps that style, and his followers. There's really to some degree a cult of personality there, and they dismiss all the lies and contradictions of the things he says and how he acts. So.
Yeah, they drink the Kool-Aid. So people argue that Trump policies regarding import tax, tariff, redoing trade agreements will accelerate robotic and automation into the labor force, much like increasing minimum wage. Do you agree with that?
Well, it will to some degree. I mean, you have to look at the specific cost factors involved. If the tariff is high enough, and it makes more sense to create the robots to do it domestically, that's what you'll see. But what that really comes down to, it's a misdirection of capital. That capital, if the tariff wasn't there, would be used for something else and increase our standard of living versus shrinking our standard of living.
And that industry is starting to expand, especially in China, where a lot of jobs are being replaced by robotics and automation. I know Foxconn are they implemented a lot of robotics and automation into their factories to replace the human capital as wages in China continue to grow in double digits. Eventually, it will happen here if the companies are forced to come back here due to the import taxes, and also the rising minimum wage. Now, you live on the West Coast, so how has the increase in minimum wage affected the labor market over there?
Well, you see it all over the place. You have small restaurants closing down, small bookstores. It really hurts the businesses that are at the margin that are just sort of making it. It's terrible to see. And at the same time, what you see is the businesses cutting back on labor where they normally would hire somebody. For example, in my travels, whenever I stop into a Denny's somewhere in the middle of the country, what you always have a hostess there that greets you. But in the Denny's here in San Francisco, you don't have that host or hostess. It's just the waiter, so you sort of have to wait for the waiter to get a free moment, and that's just sort of Denny's trying to get a workaround to the minimum wage where they just cut off on employees. So you see either losses of employees at the edges, or you see businesses closing down. In the last round of cuts in Oakland resulted in a number of daycare centers closing down because they couldn't pay their employees. And I even see it here where I take my laundry. They've cut Saturday service out because they just can't afford to pay people for 6 days. So you have to bring your laundry on a weekday.
I saw an article on your website about a robotic cafe in San Francisco. Have you ever went there?
Right. No, I just saw that story today, and it's really right in downtown here. So I plan on heading over there within the next couple of days to check it out. So in some cases, robotics is just going to occur. Say even if there weren't minimum wages or Trump tariffs and things like that, it's just an increase in the capital and production. But because of these barriers, which makes it more expensive with minimum wages and the potential tariffs, the more things make sense to be done by robots.
Yeah, and also and at the bar, they're talking about installing robotics and replacing the bartender to make drinks for people. So right,
yeah.
So it's on the rise. So it's not going to go away, unfortunately. And I'm already seeing regulations being put in place in places like Europe, because they see it coming too, and they're already talking about doing taxes and regulations because once they replace the human with robotics, that's a lot of tax revenue that's going to be lost for the government. So no surprise there. Yeah,
but that's really that Mo is really not true because remember again, market's clear. So right. If employees lose a job in one place, there's bidding for them somewhere else. Anybody that thinks that jobs are lost because of robotics really does not believe in supply and demand. And surprisingly, you get some economists that. So there was a Nobel Prize winner recently who said that one of the greatest threats to labor is robots, which means he doesn't understand supply and demand economics, because market's clear. If there's supply of labor out there, there's a price at which they'll be employed. So there's never there can be a problem because of government regulations like the minimum wage and the tariffs, but the labor itself will find work as long as they have marginal revenue product above the minimum wage.
Yeah, but in the
short, so that's just.
I'm sorry.
It's just governments like to raise taxes. They try and do it wherever they can. They'll do it in terms of saving the planet, so they tax bags and do all kinds of really silly things. But it's really, for the most part, it's a game to raise taxes. And basically, so they'll say that, hey, we're losing revenue because of the robots. But how is that? Companies pay income taxes, and in Europe they pay value-added taxes. So if a robot's making a coffee, there's all kinds of taxes being paid on that, in addition to the individuals working at other jobs and paying taxes there if there's income taxes in the country, or value added after they spend the money.
So I want to get your outlook for 2017. So the Federal Reserve, their balance sheet at $4.5 trillion, probably a little higher. Who knows how much they really have on their balance sheet. So they did one rate increase last year for 25 basis points, which is really nothing if you compare it to what they did back in the 70s with Paul Volcker. So I just want to get your outlook on the economy and where you think it's headed for the next 12 months.
Yeah, well, it's a very complex period, and it's definitely difficult to read it overall. I would say there's a few things we have to look out for here. First of all, the Fed, since the financial crisis of 2008, has pumped an awful lot of money into the system, and a lot of that money has been held as cash balances, so it really has a bit of prices. That's why you don't see more inflation, but that's starting to change now, and you're starting to see a tick up in inflation rates, so price inflation. So you're probably going to get a situation where the inflation starts to accelerate, and that's a main concern of mine here. In addition, if Trump does put these tariffs on from the supply side, that's going to put upward pressure on prices, and it's going to shrink the economy. So you a lot of negative things going on. At the same time, the Fed, at this point, there's a blip last week downward in the money supply, but for the most part, the money supply has been strong. So as long as they continue in that manner with strong money supply, you'll probably see upward pressure on the stock market from the Fed. However, because of all these changes and shifts in policy with regard to Donald Trump, you don't know how that's going to impact the economy overall. So there's a lot of cross trends, very, very difficult, but my biggest concern is that inflation is going to heat up much more than people expect, and the Fed will be way behind the curve in fighting the inflation.
Yeah, and that's a lot of uncertainty going forward in 2017, and a lot of people arguing that we're going to see higher inflation with Donald Trump supply side economics, where he's trying to grow the economy by spending on infrastructure and building a wall in Mexico, creating jobs here. So a lot of people are thinking that's going to push inflation even higher here. Do you agree?
Yeah, but it's mostly because of confusion on Trump's part. Actually, growth in the economy, which means increases in production, puts downward pressure on prices. So that's not the problem. The problem is he's attempting to adopt Keynesian spending policies, which will probably lead to deficit spending, which means the Fed is going to have to buy that debt, which is going to create more money in the system. That will bid up more prices, and you're going to get the price inflation from that direction. At the same time, because of the tariffs and other things he's doing, there's going to be less supply of goods, and then he's going to be spending his government money on increasing the military expenditures. So there's a lot of cross trends here that are not good.
Yeah, in 2017 is going to be an interesting year. I mean, a lot of drama already, and we're only 1 month into 2017, and Trump's only been in office 10 days. So
exactly.
It's going to be interesting. I think we're in a turning point in this economy and socially and a lot of other things, because it's a lot of chaos right now. So it's very interesting.
Right, exactly. And the problem is, I don't think enough people understand what are the things that can really help the economy and society. So we're probably going to get people clamoring for more controls. If it's not from Trump's end, the opposite of that, the protesters are from the left, and they're just as bad, if not worse, with the socialist thinking on their end. So we do not have lots of good prospects in the near term here.
Yeah, and a lot of events happening overseas in Syria, Russia, and China. So a lot of tension there. And it's also talk of California leaving the union, your home state. What do you think of that?
Well, there's one thing to say for the government splitting up and breaking down into smaller groups. So there's a plus there. The more that do that, the merrier. But given the thinking, the lefty thinking here on the West Coast, it would be pretty scary for California. So we'll have to see. Yeah. But remember, not all. But there's sort of this view that secession is always good, and I don't mind the ball getting rolling on secession because maybe that'll open up some area that secedes where there are more free markets and things like that. But it's a little bit of a different situation. But actually, the combination of East Berlin and West Berlin coming back together was a major plus for East Berlin. So secession is not always the answer. It's kind of a tool that works good in lots of cases. Good to get it rolling because you have more options and all that. But on the other hand, given the general thinking of most people now, especially here in California, with the lefties you have, who knows what kind of programs they would put in. It's kind of a scary thought.
Yeah, I don't know if you saw this, but Tom Woods wrote an article, and he said that he thinks the U.S. is breaking up. I don't know if you've read that article yet. Just want to get your thoughts on that.
No, I haven't seen it, but my thought, one thing Austrian economists are known for is not attempting to make really specific forecasts because the world is too complex. Yeah. And with regard to what's going to happen to the United States, I think we're clearly in a situation where things are shifting and changing quickly. But we really don't know how they're going to change. I mean, there's an authoritarian streak to Trump. Will he bring in the military? Will his military be able to hold the whole thing together? Will the left sort of overpower Trump and somehow push Trump out of office or keep him from actually executing much, and therefore we stay together as a sort of lefty society? Do we split up? I mean, there's all kinds of possibilities. The problem that I see with the split-up scenario, although in California is mostly lefty, but what you have in a lot of cities is you have factions between the lefties, your blacks, union workers. So you don't really know how all this is going to turn out. There's many. There'll be a twist of the kaleidoscope. There was a famous economist by the name of G.L.S. Shackle who used to talk about the economy and the stock market sort of going along and then shifting as though someone had turned the kaleidoscope. And I sort of like that description because what you've got is you've got a lot of pieces now in many in front of us, and you just know that kaleidoscope is going to change, but try and predict exactly how it's going to change is very, very difficult. You can sort of get senses, Trump comes in here and gets very militaristic, authoritarian, tries to crack down, it works, it doesn't work. You get rebellion from the left, they somehow stifle Trump, and there's sort of a lefty control of the country, or maybe Trump survives 4 years, and then Caroline Kennedy gets elected in 2020, or things get so bad and you start getting this secessionist movement in the country. So many possibilities, and I don't pretend to try and predict which one it will be. I just recognize that there's many scenarios here.
Right. Well, Bob, I want to thank you for your time, and people want to find out more about your work and your newsletter. Where can they go?
Okay, the best place to go is go to economicpolicyjournal.com. I also have a website that's more libertarian-oriented called targetliberty.com. But go to economicpolicyjournal.com, and from there you'll see what I write every day. And there's a link there to EPJ Daily Alert, which is the newsletter I put out. And TargetLiberty.com is where I talk more about Liberty. Economic Policy Journal is mostly limited to economic, finance, and investment topics.
All right. Well, thank you for your time.
Hey, my pleasure. Always good to talk to you, Mo.
And if people want to find other podcasts that we've done, be sure to go to wallstreetfrommainstreet.com.